central bank, according to Nigeria Central Bank Governor Lamido, the decision by the US FOMC to suspend its bond buying tapering plan will be in no massive inflow that will be a source of instability for Nigeria. However, there will be muted impact, and the country could see more money come back into equities and fixed income. CNBC Africa's Ibrahim caught up with the governor after the MPC yesterday, and let's hear more about his thoughts about the outlook for monetary policy going forward.
If you look generally at what happened first after the announcement of the imminent tapering off and then the announcement of postponement, you'll see that there has been an impact on both emerging and frontier markets. But clearly the impact on emerging markets, when you look at the currency markets and stock exchange, was more severe, both in terms of the initial capital flow reversals and the new inflows after the announcement. So there will be an impact, a muted impact. We didn't have the kind of massive run on portfolio flows that you saw in Brazil or India, and we will see some money come back. We're not going to see a massive inflow that will be a source of instability. So, but the news is good for us, because easy money means the carry trade continues, and that's good for the price of oil. It's also good for the price of equities and for the foreign exchange market.
Now, given the disruptions we've seen to oil production this year, but considering the relatively high oil prices we are seeing today, are you more or less optimistic today about naira stability compared to your view at the last MPC meeting?
Well, you know, I'm only more optimistic to the extent that the external conditions are better, in the sense that we do have certain clarity on the tapering off and a better understanding by the markets of what the Federal Reserve actually means. I think initially when Chairman Bernanke talked about the tapering off, people thought it was tightening. They do now understand that it is just about reducing the rate at which the Fed expands its balance sheet. So we're not likely to see, even when the tapering off happens, the same kind of knee-jerk reaction we saw when the first announcement came up. People have a better understanding of what it means, and they know that it doesn't mean lower interest rates, and there's been much better communication since the first announcement. Internally, I don't think much has changed. There has been a lot of discussion, but I think we still have a long way to go. Frankly, my view has always been that while we complain about the militancy and the oil theft, we haven't yet looked very closely at the huge leakages that happen under the guise of official transactions, the oil lifting contracts, the swap deals, the rate of remittances of oil revenues. I think if we close those fiscal leakages and improve government revenue, we'll have more money coming into the Federation account and more dollars, therefore the outlook will be better.